I'm Joanne Barefoot. I'm the CEO, co-founder of AIR, the Alliance for Innovative Regulation. And I want to welcome you to our panel on serving small businesses through the crisis and beyond. The United States has 30 million small businesses. They employ half the private workforce. And we know that they are being threatened at this convergence that we're living in of three enormous crises. We are living through a global pandemic. We are experiencing a severe economic contraction caused by the pandemic, and we're dealing with the social convulsion that has followed the police killing of George Floyd. And these upheavals have enormous impacts on small businesses and implications for their future. We have some of this in hand for the moment. We can hope through the measures that have been taken by Congress for rescuing the sector. But we have to deal with the possibility that we could lose millions of small businesses as we go through this crisis in ways that will end up potentially remaking our economic structure. If things don't go well, that could be a likely result. And even if things do go well as we go through the crisis scenario here, there's an opportunity to be seized to really step back and think hard about whether we can do better in how we finance small businesses in this country, an area that has always struggled with having really good, resilient models for financing. So we are delighted to bring you a panel today of very thoughtful people on this subject. We have Luz Urrutia, who is the CEO of the Acción Opportunity Fund. We have Charles Potts from the Independent Community Bankers Association, or Independent Community Bankers of America, Senior Vice President and Chief Innovation Officer. And we have Jane Barratt, who's the Chief Advocacy Officer of MX. So we want to ask you, Luz, to start by setting the stage. What's at stake here? What's your assessment of the moment that we're in, and what are the most urgent, pressing things that we should be thinking about?
Well, thank you, Joanne, and good morning, everybody. I hope everyone is doing well. You know, Joanne, for the first time in my financial services career, the awareness and importance of small businesses in our communities has finally hit home. It took this massive crisis to make it happen. Even though, as you mentioned, you know, small businesses employ 49% of the workforce and create 64% of net new private sector jobs. Despite states starting to open back up, America's Main Street businesses are on the ropes, and 3.3 million small businesses have already closed for good, with Black and minority-owned businesses bearing the brunt, according to data from the National Bureau of Economic Research. They indicated that more than 40% of those businesses were owned by African Americans and 32% were owned by Latinos. The National Restaurant Association says that 3% of restaurant operations have gone out of business. Other analysts warn that this is only the beginning of the worst wave of small business bankruptcies and closures since the Great Depression. It's just simply not possible, you know, for small businesses to survive with no income during weeks followed by reopening at half capacity. And if you think about even pre-COVID, many minority small businesses were already operating with an average of 15 days of cash reserves. And these businesses also operate in industries that were more susceptible to the disruption. 4.2 million businesses have received emergency loans from the SBA, but that's a tiny fraction of the 30 million small firms in the nation. With a patchwork of rules and guidelines being issued at the state, county, state, and federal levels, you know, many employers don't know whether it will be safe to open and how to make that choice. And they'll have reopening costs that they'll have to shoulder, and demand won't be close to what it was pre-COVID. You know, lawmakers are reopening states, but these orders only help the small businesses if consumer spending actually increases. A new tool that was created by the research group at Harvard called the Opportunity Insights Economic Tracker, which tracks what's happening to the economy in real time, shows that the economic relief measures have really done very little for small businesses. You know, the stimulus package has all gone to the bigger companies, Amazon, Walmart, not the small local stores. And small businesses that were eligible for the PPP program are generally not any better off than the ones that were not eligible. So researchers say, look, reopening doesn't really increase economic activity, and in fact, may endanger public health without much economic benefit. You know, when you talk to small businesses, there's a CNBC survey that said that only 38% of them expected revenue to increase over the next 12 months. So, you know, this is all very unfortunate because I think the result of all this is likely to further shift the balance of power, jobs towards bigger businesses that have a chance of survival, bigger cash reserves. You know, it's unfortunate because small businesses are the fabric of our communities. And to a large degree, small business owners are in this situation for doing their part to prevent the spread of the virus. And yet nearly every step, stimulus measures have disproportionately helped big businesses and left the little ones behind.
Thank you. So we're going to talk about both the short-term and long-term strategies that might be available to deal with this problem. But I want to start with the short-term, and Jane, ask you to talk about the Paycheck Protection Program, and Charles, you as well. The PPP has been the main method so far for helping some of these small businesses. Talk to us about how that's going, what's ahead, and Luz touched on how effective it has and hasn't been.
Yeah, so the PPP really was kind of almost a perfect metaphor for just being a small business owner, as well as being like such a clear inflection point for the need for change in terms of just how small businesses operate. For a little context, I've owned my own business. I have a number of personal finance courses that I've authored on LinkedIn Learning, and as well as some small business finance courses. And in both of those, as an owner and an author, just the lack of resources that are really kind of actionable and just sort of plug and play help that you can get in personal finance as well as in commercial banking just really don't exist. And I think the reality is there is such an enormous burden on the small business owner when you don't have the benefit maybe of a CFO, or you don't have the benefit of a personal banker. Like, it's all on you. And I think PPP just like broke the dam open and showed the reality for so many business owners. I think obviously what didn't work is that things like the loan threshold was obviously a fairly big mistake coming out of the gate, in that the smaller businesses were not eligible. The opacity around process and rules was a huge issue. Again, you're in crisis mode as a business owner, and you're trying to sort of, see whatever has been released by Congress the night before to figure out what has to be done the next day. I mean, it was a pretty insanely heavy burden. And I think just the speed to market, I think, there was quite a bit of back padding going on that, we solved for this, but vulnerable businesses, like what Luz said, 15 days of cash flow, like they were already gone. And so that, the vulnerable businesses really hit hard. I think it still remains to be seen in terms of the resurgence, reopening.
And you froze up. Charles, let me turn to you to add on to that.
Yeah, so I think it's it's been an interesting challenge addressing what's happened with small businesses, especially because let's take a step back and realize as soon as the COVID crisis hit, everybody first had to focus on their own personal health, the health of their employees, co-workers, friends, neighbors, people that they worked with in their supply chains. So we were all, as a nation, addressing a real health crisis. At the same time, we started having all of these mechanisms coming around on how we could manage some of the financial crisis that was coming with it. And I think one of the things, just building a little on what Jane said, that became very apparent to a lot of small businesses is they did not have a banking relationship. They did not have a banker. And where there were really strong banking relationships, we saw some really good early success and continue to see success. with some of the PPP lending. One of the things that we at the ICBA knew is prior to this, almost 2/3 of all small business lending came out of community banks. So there was already a very healthy relationship there, and it allowed the bankers and the small businesses to really identify one another at this time of crisis and really rally around their communities, because where there's a healthy community bank, there's a healthy business community and vice versa. And so there was a very profound rallying cry around that. And to a large extent, the bankers rolled up their sleeves, got out there in a heroic way, got the money in the hands. Many of them were advancing these loans. Many of them were funding these businesses in advance of consummating the PPP. And this went a long way to stabilizing what they could in the communities they served. It's where there were businesses that were doing that really didn't have a good banking relationship. It's where they were hidden on a retail platform because they didn't identify as a small business. That was the real challenge. I mean, when this thing rolled out and when we listened to the Treasury Department, the SBA talk about the goals and objectives, and when we talk about 30 million small businesses, the fact that we still to date have rolled out less than 5 million loans tells us there's still an unknown, under-identified, under-allocated part of our marketplace that we need to work better to address. And I think that's the real lesson that we're all now trying to introspectively learn. How do you truly define a small business and identify them? And to Lou's and Jane's point, how do we get those additional financial services in their hands so that we can address cash flow and payroll and what the employees then feel out of that, which is also the personal cash flow, and this interesting cycle and challenge that's going to continue to manifest itself until we create an ecosystem that matches the timing and needs around traditional cash management. What a big treasury corporate deals with on massive scale, small businesses literally from one pocket to the next. That's cash management for a lot of them.
So let's go to that. We've always known that the financing models for small businesses have been limited, and many function more like consumers, the very small businesses do, than as business enterprises. It's difficult for banks to underwrite and service very small loans on a profitable basis. But we are seeing new technology coming into the space from Fintechs and also from adoption by banks of new technology. Charles, you and I got to work on a couple of hackathon type events with some tech solutions for community banks that were very, very interesting. I'd like to ask any of you, if we could figure out how we should come out of this with new models that would do better, would fill in this gap for small businesses, what are the secrets to making that work?
I will just say one of the things that we've seen happening really pre-COVID, and frankly, COVID and the CARES Act, I think, have highlighted, is this notion of daily payroll, right? This ability to identify how you're going to pay people in a real-time basis, how they're going to have funds available, and finding the aggregated platforms that can do some interesting new underwriting and scoring. I mean, we're seeing a massive amount of artificial intelligence and new scoring models enter the marketplace that help us identify better ways to truly validate and underwrite both the employees and the small businesses, again, who often look the same, in a way that new credit facilities can be created to support them. I think that's a near-term reality that frankly was underway before this and gets accelerated as part of this.
Yeah, it has been underway. This move toward doing cash flow underwriting, in addition to looking at traditional credit risk models, has the potential really to be a huge breakthrough. Lucy, you look like you've got something to say.
No, I was just, I'm just thinking, I think this is an excellent opportunity for community banks and CDFIs to embrace technology and establish integrated partnerships with banks, fintechs, community partners, and frankly, other referral sources that have much larger reach and more robust budgets to market and acquire small business customers. I think, Joanne, Opportunity Fund and Lending Club, the nation's largest online lending marketplace, we established the first national, which was really an award-winning partnership to expand access to responsible and affordable capital for small businesses. And since that time, a CDFI in California, we have expanded into 46 states and have deployed capital to thousands of small business entrepreneurs. So that's, the beauty, right, of combining the mission focus of a CDFI with an online lending expertise of a fintech, then creating a new model to deliver responsible, affordable, and transparent lending to meet the needs of small business owners across the country.
Yeah, absolutely. And you saw a number of these create some real interesting speed to market partnerships with technology players and new startup fintechs, to the point where they truly could acquire PPP applications at scale, at massive volume, and could get them processed in a manner unseen before. Again, the numbers are staggering in terms of the volume of activity these community banks and CDFIs did. And to a large part, it was because they embraced brand new innovation. As I think many of us have talked before, they found ways to reduce the friction, reduce the barriers, and speed up getting end-to-end processing of applications underwritten, approved, and funded at a pace that frankly should be a model for everybody going forward.
Yeah.
Go ahead, Jenny.
I think, we had experience of that at MX. We partnered with a number of, community banks, regional banks, credit unions, and implemented an open source and free PPP application portal. And, so much of it is the technology, but a lot of it is just the culture and the speed of decision making. And, digital banking has always been important, but not urgent. And, these collective crises have definitely shown the urgency. But I think to your question, Joanne, around models, there's been such a focus on credit availability, almost to the detriment of every other model. And, that innovation gap really has been exposed. I think if you look at, there's like Tab Bank here in Utah have, massive innovation, both, technical and cultural. And I think one of their, great innovations is having a back office service. So they'll do AR collections on behalf of their small business clients. Like, again, as a small business owner, if you can give me 5 hours of my week back, I will pay for that, and I will engage with you as a bank in, a much more profound way than just seeing you as a source of funds over time. So this move to, the different business models around providing that broader suite of services, again, both technical and personal, I think will be that next generation of innovation.
Well, it's a great point, because one of the things, again, that we always see with America's community banks is that they are small businesses as well. Mm-hmm. So this notion that between the banks and the fintechs and the small businesses, they can all better identify what they're really good at and outsource to one another those things that they're not. Yeah. And you point out that a number of banks are in fact finding that they can provide those back office services, collection services, call center services to their small business customers, and alleviate a lot of not only the cost and burden, but again, the speed to market for many of them.
The other thing too, to add to that, is that these businesses, especially in this time, they're also going to need significant amounts of business advising and technical assistance to figure out how to comply with health orders and how to develop and diversify their revenue streams so they can stay afloat, how to connect with government contracts and vendors, financial tax advice, marketing, retaining customers. So I think that, providers really have a great opportunity to say, just to Charles' point, what do each of us do best, and how can we bring that expertise to play for the overall good of the small business community?
Charles, you made the point that a lot of these innovations were already underway and gaining momentum before the crisis, but it does seem like the crisis is accelerating, as you put it well, Jane, saying going from desirable to urgent to have some of these digitized solutions. I talked with a regulator recently who said the prior crisis basically froze up innovation, paralyzed it for years, and that this one's accelerating innovation all the way across the board because everybody's been adopting online and digital models. So we have a question from the audience. What do you think are the reasons that many small businesses have not gotten PPP loans? And Charles, you already spoke to some of that. If they didn't already have a robust banking relationship, it took them longer to get into the queue. But what are the other obstacles that these businesses have faced?
I know Jane probably has some pretty good insight from the MX perspective, but to a large extent, Excel is the biggest back office product used by small business, right? And with no knock of some of the other payroll and accounting system providers out there, the fact is most small businesses are using spreadsheets, and their ability to collect information that, by the way, all of us in the middle of the crucible of fire going on knew was changing on almost a daily basis, right? A moving set of requirements that the SBA created for the bankers, both the lenders and the borrowers. So that challenged any small business to just reconcile in their own mind, what information do I need? Where am I going to find it? What format do I need to put it in? And where do I send it? So to a large extent, that standardization gap from a small business accounting and payroll perspective has probably still to date, because now we're into the forgiveness calculation era, is still one of the biggest hurdles that the small businesses face.
Jane or Liz, do you point to other hurdles? And let me ask one in particular. How big a factor is it that to be in this program, the lender has to have done the Know Your Customer anti-money laundering check on the customer? And so existing bank customers had already had that done. It gave them a fast track in a way. Was that an important factor? And what others would you put?
Yeah, it's definitely a huge piece because, not only is that sort of perceptual connection in place, this bank trusts me, they've probably, and again, the big banks did great outreach as well. Like this wasn't just a monodirectional thing. For small business owners who maybe had jerry-rigged their finances, where yes, it was Excel over here and they had a loan from an online lender over there and they had their deposit account down the street. And for them, it was this sense of like, hey, how do I even begin to get all of this data together? So I think honestly, a lot of this upfront was around small business owners even just sort of saying, what's the point? Like, I don't even know how to get this information, quickly and accurately to be able to even submit. But then there is the systemic part of it, which is you have, a landscape where you've got contractors and gig workers and freelancers. And, it's not like, I can just go to my payroll provider and pull all of this data down. Like there tends to be kind of a patchwork. So any business owner who's looking to risk mitigate and thinking down, actually, if I take this loan, am I even going to qualify for it? But I'm going to pay it back. Like there was so much opacity around the process up front, but there also wasn't just the infrastructure and the pipes in place for a quick, you can go online right now and see if you qualify for a mortgage like this, like in the retail space, right? can a small business owner do that? Like, what are the key dimensions of their data that they need to present? And there just hasn't been the investment to date from either a data perspective or infrastructure perspective to say, here is a clean view of what this business is. And, that was one of the biggest gaps.
So should that develop organically, or should there be a program, an initiative to try to digitize the records of small businesses, those that want it in a standardized way so that they can more easily play in the digital world?
I would say no. The real issue is if you're in certain vertical markets, there's a whole another set of relationships and accounting systems and point of sale systems and inventory control systems that, if you're a restaurant, you're a hardware store, you're a dentist, or they all have some unique accounting needs and accounting solutions that would make some kind of ubiquitous standard very, very difficult. And I know the payroll processors have tried to address this, but in the end, we've got a very fluid, competitive landscape of entrepreneurs and small businesses out there. But I think somewhat your previous question and to Jane's point, the biggest burden when creating that the lender had to have some KYC in place precluded them from doing business with somebody that just had their business checking account with them, right? They had to go change their whole look and then start KYCing somebody. They didn't have a credit relationship. So where the small businesses had a credit relationship, a big barrier, big set of friction was already removed. That's why we saw so many small community banks, mid-sized community banks, and even larger banks with known credit relations move quickly and move a lot of businesses. It was the ones who had cobbled together a set of financial services through neo-lenders and banks of all sizes and shapes that had to really jump through the hoops to get back through this process. And frankly, amazingly, even the smallest of the small and the biggest of the big were able to stand up some pretty quick, interesting new underwriting applications in order to be able to do that. And again, and the numbers are staggering.
Yeah,
a lot of banks, just to be able to on the fly in a matter of hours now, then underwrite an unknown customer. That's what ended up happening in a lot of cases.
yeah. And in a pretty heroic effort, as you said, Luz, it hasn't been enough, but there's so many stories of people working all night shifts in the lending community to try to help as many businesses as they could. And I'll also say a word for our friends at the SBA. They had this hit them with no time to prepare for it. And they have 20th century technology that was trying to solve a 21st century.
19th century.
Yeah. Luz, were you going to add something?
Yeah, no, everything that has been said is right on. The only thing I would add is that remember immigration status, right? A lot of these minority-owned businesses didn't have the required documentation because they're owned by, immigrants. And, if you think about it, in our case, 65% of our customers, they pay no employee wages, right? So they had no employees to utilize PPP. And a full 75% don't take an owner's draw consistently, making it even more challenging for them to document their payroll needs. So we saw the immigrant community being really impacted and not being able to access PPP loans as much.
Yeah, and look, the SBA did a heroic task as well, and I jokingly talk about their technology, but the fact is, we as a country expected them to process 100 times the volume they did last year in just a matter of weeks.
Yeah.
And they did it. And we found a way as an industry to do that. And as much as anything, as much tragedy, if you will, that there is, that we're all still dealing with. I think there are some amazing, shining, bright lights out there that we can all point to as foundational for going forward and really building some solutions and relationships and communities to help address some of these challenges that we're talking about today. The Fintechs, the banks, many of the small businesses did some amazing things, and we should all go find those testimonial great success stories and figure out how to model them on greater scale around a lot of these communities we serve and want to serve better, because there is a shining ribbon of success throughout there that I think is important.
Yeah, I think one thing to add here around this conversation is the concept of open banking and the way that, you know, secure data sharing has been really highlighted as a way to circumvent some of these issues, again, in the retail banking space, not necessarily the small business space. But, you know, obviously at a federal and state level, you have a fairly strong tax infrastructure in place. For small businesses, it probably makes sense to broaden that lens of open banking just to make sure that, you know, data sharing can be done even amongst the bigger institutions, bigger government institutions, to be able to speed up things like KYC, KYB, and move that, you know, move the needle forward much quicker than is currently happening.
So let's look at what the future might be for the makeup of the market for banks and fintechs. So for years now, fintechs have been watched closely and questioned on sort of two dimensions as to how they would do in a downturn. One is whether their models are robust enough to deal with a downturn of this kind. Most of them rely on cash flow underwriting and alternative data types of underwriting instead of traditional credit. And the other is whether their business models are resilient enough, since they don't have low cost, stable funding like banks do. So some of them are being hit by the business model piece, has caught them very severely. But so far from what I've seen, I'd love your thinking, the underwriting models are doing well. And in fact, arguably better than ones that are backward looking at what the person was able to do in the past, since this situation today is not like the past. So, and also PPP was the first time that non-banks were allowed into the SBA programs at all. And the big ones were able to come in and get a lot of lending done. So what does that augur for the future in terms of the banks and fintechs working together? Are the lines going to become softer between those two realms, and would that be good? What do you think about that? Luz, let me start with you.
Sure. So, you know, I think we need to think about that the traditional methods of evaluating small business may not work as well as they once did. And here's what I mean, right? So consumer level credit scores like FICO and Vantage scores were built to evaluate consumers. And while they have worked somewhat well for small businesses, they were never intended to be used for small business lending. Furthermore, any credit score will need to be reevaluated and recalibrated, whether broadly offered score like FICO or a custom built one, because the relationship between score ranges and expected losses is bound to be different in a recessionary economy, especially one affected by COVID. Furthermore, you know, if you think about all the forbearance that's being offered and accounts not being reported as delinquent, borrowers' credit will look better than perhaps their true underlying risk really is. So we believe strongly that in the use of algorithms, right, both for credit and fraud risk assessment, but along with experienced and talented underwriters to help review the difficult cases that are inevitable when evaluating small business risk, even more so now, given what's going on. You know, combining internal and external data sources, deep analysis of business cash flow, debts and fraud tools, especially for online lending. And we're seeing a lot of that now with our lending club partnership, of which we're doing, significant lending. Also, it is really critical to evaluate bank statements and tax returns. There are lots of bank verification tools, whether it's Plaid, Finicity, Jodely, they're all extremely helpful. And, there's a belief, right, with the shelter in place, that the traditional model of visiting small business owners face-to-face will not be the same. And I got to tell you, Joanne, we agree with that, right? So even for our non-digital channels, they will act more like digital channels in the future. And as a result of several of the fraud tools that we have, we're extending those across channels. An example is TruePic. I don't know if you've heard about them to help mitigate fraud. It's a service that allows the borrower to upload pictures of their business to share with their underwriting team. And the pictures are verified using location technology to make sure that they're legitimate. And so these pictures now really replace the need for a business site visit when one cannot do it, whether it's shelter in place or because we don't have, people in the local communities, right? But I do think that the underwriting, some of the underwriters are crucial. Having experienced underwriters on the team that can dig into financials much closer and provide oversight and understanding about how the business is working is really important. I think that a very much more value add end-to-end customer service approach is now critical, starting with a welcome call, proactive, empathetic customer care, targeting collection efforts, very important at this time, giving people the flexibility and the ability to make payments in multiple ways, whether it's online, at retail locations, ACH, bank, debit. And of course, there's other thing, and hopefully we'll talk about it, which is how does the government play a role here? Because I think that all these things can work, but the government needs to think about how can they provide support in the form of loan loss guarantees so that, that communities can prosper and lenders may be willing to lend into what is now significantly riskier communities.
So we are running pretty short on time, and we've got a few questions from the audience I want to get to, but Jane and Charles, do you want to add anything quickly to what Luke said?
Well, I will just say that one of the initiatives with the ICBA took on 2 years ago was really fostering our own innovation incubator program to bring in startups and teach them how to work with community banks and teach them community banking and literally boot camp them through this equation. The beauty of that is that of the 17 we brought through in the last 2 years, 11 of them had mission critical solutions that they could deploy and put in place to address the needs of thousands of banks around the country to address this PPP loan crisis. And to a large extent, that's a manifestation of the banking industry, the Fintechs, and even the regulators recognizing this is a better model and this is a good workable model. And at a time of crisis, they all got it done. And again, I think that is a massive story for the industry as a whole, and that is there is a way to get this done effectively, and we've got some testimony to that effect over the last 12 weeks.
So we have 5 minutes left. I think you have your picture has frozen. Can you hear us?
Yeah, me, Charles. Yes.
Jane.
Yeah, I can hear you.
Okay.
Yeah.
So we have 2 questions that are dealing with minority-owned businesses. One on what's being done to connect them with funding, and the other on are there examples of Black-owned businesses receiving PPP loans through CDFI and Fintech cash flow analysis models, if anyone knows of specific cases of that. Anybody want to take those?
So there are a great deal of minority banks and CDFIs that have been profiled in various media over the last few weeks who have done a great job of identifying the minority businesses that they serve and helping them very clearly in a very focused way with the PPP lending. And they have all built some pretty good technology platforms to allow them to again do that in a very fast and efficient manner.
Yeah, I mean, that's who we deal with. That's our target market. It's all minority-owned businesses. And we look at their cash flow, just on the PPP side. I mean, we launched a small business relief fund, and since then we have helped minority, immigrant, people of color, women-owned businesses with payment forgiveness, payment deferment, new loans. We have extended and helped over 1,000 small business owners with PPP loans that we, either extended to them directly or went through partners to help them with it. So, I wouldn't say that PPP was a full underwriting model. PPP was more of a document and audit verification model. I think when we get to real lending, when you're looking at cash flow and bank statements, and the customer's ability and capacity to pay, that lending is a little bit more difficult, but that's what, many CDFIs, including ourselves, do every day for minority-owned businesses.
So we have a few minutes left. Luce, you touched on the role of government. Let me finish by asking each of you to talk about what you think is the advice. We have a lot of regulators and policymakers and government people listening in. What would be the most important steps that government could take? Remember that we have the whole Fed Main Street facility also becoming available, and maybe some fintech potential for that as well. So, if you were running the government, what would you do for this problem?
Get out of the way and let private business tackle it. I mean, there's from a speed to market and innovation, I think there's a lot of knowledge just sitting here in this call with folks like yourself and Luz and Jane. We need to marshal that knowledge in a very directed manner, and to a large extent also give them a pat on the back, because they have been working hard to listen to the fintechs and the technology and the innovation and find ways to speed this up. Then the policy side needs to catch up and support that as well.
If we had time, Charles, I'd love to hear what specifically you think the government should do to get out of the way, but we aren't going to have time for that today.
Don't build a forgiveness calculator.
Okay. Jane, can you hear me?
Yep. Yeah, I think, so much of the regulatory world has been around safety and soundness, and it really has put the institutions into a place of just being intermediaries, right? So we process loans, we take deposits, but this very sort of intermediary role for just the entire ecosystem to focus on outcomes and how to advocate for better outcomes across the ecosystem would be a very different way to think.
Yes.
Good. And Luz, you have the last word.
I think that a couple of things, right? So government guarantees, I think, are very, very important. As an example, I'd say, a loud cry for the reauthorization of the State Small Business Credit Initiative, SSBCI, to fund loan loss reserves and guarantees for borrowers that can't qualify for SBA guaranteed loans, or where lenders look at them and say, you're too risky to lend you, right? So I think this is going to be critical for the recovery, as it will provide a backstop for lenders to want to lend. Also, the Community Reinvestment Act, needs to be stronger than ever. We need consensus between all regulators to ensure that the original focus of LMI communities is preserved and it's expanded with any updates that can take place in the regulation.
Yep.
If we were live, I would ask the audience to join me in applause for this wonderful panel. But thank you so much. It's been great talking with you all today.
Thank you, guys. Thank you so much.
Thank you. Be well.
Appreciate it.